Good evening, traders and friends. I'm Nalnakshi Swami, welcoming to my channel. Today, everybody was questioning my 5-minute trading strategy because the market did something off the track. Even me also caught in this. What did I do is, after applying the first 5-minute candle, high and low, and when it broke, this was a complete breakout of the first 5-minute candle, establishing the trend. But I didn't wait for that was a lesson for me. I didn't wait for the closure of the candle and retest to this 180-degree failure. I should have waited. Then only I should have taken trade. Instead of that, I rushed into the trade. But once it started retracing back, immediately I started covering my shorts, whatever I had taken put option, and immediately, of course, I ended with profit, around 600 rupees profit. I trade only in one lot, and I covered this one. I anticipated for higher targets, but it did not go to that. Once it started reversing to 180-degree and a bullish candle forming above this 180-degree, it was a questionable thing. It was a question. Why did the market do like that? Because sometimes market behave in that no strategy will be 100%. You should remember. And another mistake was jumping into the trade before the confirmation. I did not wait. I thought I too did the mistake that it is by seeing this big red candle, instead of waiting for retest failure, I jumped into the trade. Sometimes what happens, it starts coming down. Because why I did the thing is, it was engulfing all these three candles. That was the reason I started thinking that the trend will continue to the downside. But instead of that, the smart money grabbed all the liquidity and reversed the market, and it started moving higher. But if you see the market, there was no momentum in the market. After this initial up move, you can see, let me take the tool. Through the time cycle, market stayed within the range. It did not even expand to the 1:2. It was within the range. There was uncertainty in the market because the reason was different. Even on the this type of behavior happened on the previous week on 6th of March. The market tried to come down and it broke down, and at least it made the 3 cycles of move. I've applied the 3 cycles. 3 cycles, it came down and it started reversing in the market. And the trend continued in the market. This was also a trap. You can see over here on the left side, engulfing all the candles. This was the liquidity trap did the market. Sometimes market smart money will do this type of behavior. When they start doing this type of behavior, when they are grabbing the liquidity beneath it, that means something is, market momentum is stalling. That you should understand. The reason for that, let me take out all these things. Let me go back before removing the things. You can see the market behaved in here, I believe. Here it behaved in the same fashion, and market started moving higher, and then market went through sideways movement. So there was a liquidity crunch. This type of behavior market did show on the 6th of March, and then it started moving higher. Why the market started behaving like this? Because it has already run up. Let me remove all the drawings. From here, if I take the cycles, if I mark the cycles from here to here, this is one cycle, two cycle, this is the third cycle. It is almost approaching the third cycle. Third cycle, that is around 23,000 and 22,983. Market did stall, they tried to move higher, 22,937. It is at the short distance of 22,982 to 23,000. There was no momentum in the market. Probably some people might have entered into the call option, reversal call option. Usually it is against my discipline. I don't go actually. I don't trade. Once I was not comfortable because I was able to make out that after the market started reversing, it is stalling and there were levels for me. These are the 3 cycle levels which were ahead, and also I will show in the daily time frame why I hesitated. Here it started moving sideways. There was no momentum. Even if you would have taken only in the morning till 10:20, some big green candles formed. The call option people might have made money from 105 to 160 like that. That is a risky job. I felt it is a risky job. I did not trade on that. So why? Let me take you to the daily chart. Let us analyze why this behavior has started in the market. Let me remove drawings. And the market started showing its down move from here to here. And there is a counter of halt in this area. This is the counter of halt. If I take the this tool, fixed volume profile, and I apply this, the point of control, POC, is exactly placed at this level. That's why this is the behavior. This is the behavior. It was facing some sort of resistance. It needs momentum. The market came down and it showed some sort of a trap behavior. This type of behavior is called trap and reverse. The market does this on and on to trap the liquidity and trap all the traders and to trap them and they will be fearful. This type of behavior, once they enter into the market and if they meet with losses, definitely their psychology will be affected in the market. The next time, even if they see the real breakout in the market, they hesitate to enter into the market. This is how the market plays the trick with the psychology of the traders. So anyway, I was quick enough to pinpoint the trade. I exited it, but I took care not to enter again in the market because that was my discipline. So you need to have some principles in your trading. That is trading principle, risk management, and trading with only few lots. If you don't get the trade, if the trade doesn't come to you, it doesn't work, you're not going to trade again. And also, if you meet with losses, you are not going to do revenge trading. Those are the disciplines, and if you follow that, you will be successful. Of course, I was profitable from here 3 days, but this was the day. It trapped me also. And people were questioning me, this 5-minute strategy didn't work. Yes, it happens because if market was approaching the almost resistance, and already it has completed 3 cycles. 3 cycles of up move. If you measure this, if I take the fib tool, fib retracement tool, I'm not there. Okay, let me go there. And if I take this tool and if I do this measured move, see almost it is approaching the one level, 22,980. This is ABCD pattern. ABCD pattern, the market is experiencing it. It is facing, it is very, very near the high, and it made an high of 22,940, just short of 50 points in the market. And also the strategic POC, from where the market has dropped down, the sellers area, it was approaching the sellers area. So in this area, it has to, this is one cycle and the two cycle has completed. If it has to proceed further, it needs more liquidity or any news trigger, market has to come down. Now a dozy type of candle has formed in the market. We need to watch and watch. Wait and watch what sort of price behavior will be seen, whether tomorrow it will be an engulfing candle. It may do like this also, bullish engulfing. That type of behavior can also be seen in the market. Or we need to wait whether it is able to break above the structure. If it starts breaking above and closing above that, another cycle will start in the market, another measured move we can anticipate. I don't think so in this month market is going to make another cycle. If the market wants to make, see, this is the measured move from here to here, that is 23,345. Now, if the market does this in this month, it is a very bullish signal. Bullish signal, market will experience a reversal, slow reversal, and we can anticipate for a reversal in the market. Even otherwise, this move, what the move which is presented over here in this month, it is a promising one. Promising one, market has shown ABC pattern. Nowhere it has shown like this. This pattern is shown like this. So you will be presented with this type of presentations also in the market. Why this presentation? You can see that is dozy type of candlestick formation. Let me remove this fib tool. Dozy type of indecision type of movement. Why the indecision? Due to approaching the key levels and the resistance, and also it is making the three cycles of Gann cycles. It is approaching three cycles, which I have shown in my previous video. This is how, so you need to be very careful. I should have been very careful because of this too much of up move. The cycle will start. Here also you can see after the two big candles, it took the liquidity over here. That is on the 6th of March. You can see the 6th of March. After that, market has gone sideways. You can see the price behavior here, even the price behavior here. And it was this much liquidity was not too much, but the price did not expand too much in the throughout the day. The range was very narrow and a dozy type of candle is formed, and it is an indecision candle. We need to see what sort of behavior will be there in the market, whether another cycle of after the ABC pattern, any down mode will start. See, these are the two impulse moves. Like this. And market should make a higher low. Something like this. It may come and return and test this. When it has made an higher high, it has to prove that this level, it has to hold and it has to prove. This is the normal behavior of the price action. If it comes down and if it starts taking support, not going below this level, 22,284, then the trend will be confirmed. Sometimes what happens here is, sometimes the market will come down below this level to seek that is trapping, to seek the liquidity. Even if it comes down, one. Let me put a box over here. And if it takes this liquidity beneath this, these are the put writers box over here. It can sweep this liquidity beneath this, and it can gather momentum towards the upside. This type of price pattern is also noticed in the market on and on. Once it traps, it will, if it takes the liquidity from here, the market will gather momentum to cross this barrier. Now, at present, this is the maximum barrier because you can see on the volume profile, high volume nodes are there, and high volume nodes are clustered over here in this area. So these are the reasons why the market did behave today. I was anticipating this, but I too did the mistake. But something, my instincts, by chart reading, my experience saved me. Actually, I came out with the profit. I do not know, some people might have lost money also. Many people might have lost money. That is nothing. So in that situation, even I too did the mistake by jumping into the trade without waiting for the confirmation of the trend. Confirmation of the trend. That is a lesson for me, for everyone. Thank you very much, friends. Nannakshi Swami signing off.